Greetings, everyone. Well, we have more clarity now in terms of the investment landscape after the election. And I wanted to talk a little bit about deja vu for me. I started my career really in the early 80s. And at the time, we had the Reagan administration and a lot of controversy about everything, much of which we're hearing today, the same kinds of controversy. So I wanted to take you a little bit through the macros, what the Trump administration says it wants versus what might likely happen given that backdrop, as well as how this clarity is going to impact the world of innovation. The world of transformative innovation. And we believe the world is transforming and in miraculous ways. So we want to take you through some of that and how this administration, its policies are probably going to accelerate these changes. So let's talk about macros first. In the early days of the Reagan administration, there were back-to-back recessions, and interest rates hit 15%. And that was a very difficult environment for investing. Well, President Trump is coming into office when that part of the equivalent in the Reagan administration has been done. And I remember after that, the 80s and 90s were the golden age of active equity investing. And I think we're going back there. First of all, in terms of the controversy, a deficit back then, after back-to-back recessions, 5.5%. The bond market was apoplectic about that. Investors were as well. And what they didn't understand is that the Reagan policies of tax cuts, along with lower interest rates caused by Volcker, moving from double-digit interest rates to something much lower, that those were going to be very positive for economic growth, and that we were going to grow our way out of the deficit. That growth out of the deficit started in the 80s with the Reagan administration and finished in the 90s with the Clinton administration, taking us into a surplus. We think we're going to experience somewhat of the same thing this time around. The tax cuts, we believe, are critically important, especially if Trump makes good on his tariff promise.
Nvidia stands to possibly double its stock value once more in the coming year. This semiconductor titan, which is renowned for its innovative prowess in the AI realm, is making headlines with its latest revelations. At the heart of the buzz is Nvidia's Blackwell architecture, a groundbreaking technology that is rumored to revolutionize the GPU market and is already selling out a year in advance. Indeed, as whispers about this transformative development circulate through financial circles and tech forums, major players like TSMC and Morgan Stanley are also joining the conversation. This saga unfurls more as a comprehensive storyline of technological evolution and strategic growth than merely a stock tip. Welcome back, everyone, to Investocracy.
I think President Trump is very pro-growth, and he's not going to do anything to impede growth in that way. He wants the dollar down. He thinks that will make us more competitive. What I think will happen is the returns on invested capital in the United States relative to those elsewhere in the world, they're going to increase, and that is going to attract more capital, which will actually boost the dollar. Now, in terms of interest rates, the dollar going up is anti-inflationary. As is the productivity growth associated with a burst in activity caused by lower tax rates and other incentives for investing. So if inflation is going to surprise on the low side of expectations, that's going to be very good for innovation-driven strategies.
As we unravel NVIDIA's journey over the past few years, we see a tale that is nothing short of a riveting saga. With its shares soaring an astounding 860% since the start of 2023, one might wonder how a company continues to defy gravity in the stock market so spectacularly. The answer is rooted in Nvidia's AI-centric innovations, which have emerged as the lifeblood of its revenue surge. The recent introduction of the Blackwell architecture stands as the latest jewel in Nvidia's crown. On their November earnings call, Nvidia's management unveiled a future teeming with promise, even noting that these cutting-edge GPUs are not merely in production. They're flying off the proverbial shelves faster than anticipated, leaving stores with out-of-stock signs in their wake. However, in the fascinating world of semiconductors, hype alone doesn't suffice. Supply and demand are the true currencies. Here, Nvidia has seemingly struck gold. Despite the demand significantly outpacing supply, the stalwart manufacturer behind Nvidia's chips, TSMC, has committed to doubling its production capacity. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
I think a lot of investors have had trouble believing that it would stay under control. The way inflation will stay under control is productivity growth, and we're already seeing strong productivity growth thanks to artificial intelligence and other new technologies, as well as actually the dollar firming. Most commodity prices are priced in dollars. Most commodities are priced in dollars, I should say. And the dollar going up means downward pressure on commodity prices. That's a very good thing as well. So what will happen to interest rates here? Now, this is a little different from the 80s. Interest rates were so high at the beginning of the 80s, 15%, that really, if the Reagan administration got anything right, those interest rates would come down. And they certainly have. Now, 45 years later, they are high relative to recent history, 5% on the Fed funds rate.
According to IDC, the goal is to produce an extraordinary 660,000 chip-on-wafer-on-substrate units to meet the skyrocketing demand from Nvidia and its rivals. The excitement within the company is palpable, and there's no shortage of witty banter among employees. When we factor in market projections, this narrative becomes even more compelling. Nvidia has secured around 60% of TSMC's advanced packaging capacity for 2025. Furthermore, Morgan Stanley has estimated the shipment of upwards of 70,000 Blackwell B200 systems, each potentially fetching as much as $3 million apiece. The financial forecast is looking increasingly promising. Analysts project that Nvidia's revenue could reach an astonishing $195 billion in fiscal 2026. This represents a significant leap from this year's $129 billion prediction. It's abundantly clear, when Nvidia makes moves, the AI market feels the ripple effects. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We believe tax rates are going to come down. We're probably going to wait if we're businesses and consumers. This is classic. It even happened during the Reagan administration when he phased in tax cuts over 3 years. Most people just waited until the tax rates were at the point he had promised. So we probably will see some holding back of activity in the next year in anticipation of even lower tax rates. So I think interest rates will be biased to the downside. Thereafter, I think we're going to see an explosion in productivity growth. That's what the convergence among the major innovation platforms around which we've centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the healthcare space. Those platforms are converging and we believe are going to unlock explosive productivity growth, explosive GDP growth, and much lower than expected inflation because all of these platforms are deflationary. They're technologically enabled.
As we stand on the cusp of 2025, Nvidia's stock is positioned not just for stability, but for spectacular growth. Analysts are lucidly projecting an earnings jump of at least 50%, which is a stark contrast to the modest 12% estimate for the broader S&P 500. A leap to $275 per share is well within the realm of possibility, should Nvidia sustain its powerful momentum and maintain an earnings multiple in the neighborhood of 55. For those who are keenly invested in the future trajectory of AI, Nvidia represents more than just an enticing stock holding. It opens a gateway to cutting-edge progress and substantial financial gain. In a world where technological advancements occur at the speed of light, Nvidia appears to be lighting the way. Investors would be prudently advised to keep Nvidia as a cornerstone of their portfolios. But let's pose the question, what about you? Do you perceive Nvidia as the ultimate torchbearer in the AI revolution, or do other contenders command your attention? Engage with us, share your insights, and position yourself strategically for the sweeping innovations of tomorrow. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.